Well, okay, so Wednesday we had our Federal Reserve meeting minutes. So, it's always delayed couple weeks after the Fed policy changes or whatever. They'll release the meeting minutes. And so the meeting minutes, I actually combed through them quite thoroughly. And so the main thing is they said at least a couple more 50% or 50-point basis hike rate hikes. So at least a couple more. So that was the first thing that stood out to me. Second thing is that they're thinking, they've gone with this neutral to restrictive policy. Now they're looking to go full on, just label it, which is a big deal, right? It's the Fed has both the levers that they can pull, but they can also manipulate people's minds, right? And so they do that by kind of publishing their thoughts and stuff. And so one of the things was that they're going to start calling their policy, instead of being neutral, they're going to call it restrictive policy. They
Mm.
actually want to officially slow things down. And then the last thing, and of course, I always pay attention to this because they try to slide it through under the radar. They stopped buying all those bonds that they were buying. They were buying treasury bonds, they were buying mortgage bonds, and then they actually even started to buy corporate bonds. They stopped that, but now starting in June, they're actually going to start selling them back. And they want to, by August, get up to selling about $95 billion back. I think it's I wasn't sure if it was I think it's per week. $95 billion back per week. And they kind of wanted to, they discussed in their meeting minutes the split. So they're going to sell about 2/3 of it every week is going to be the treasury bonds, and 1/3 is going to be mortgage. But then somebody came back and said that maybe we should just get rid of all of the mortgage bonds on our books, which is about 1/3 of their books. Remember, if what I'm showing here on my screen shows the balance sheet of the Federal Reserve. And so you can see that they've been steadily buying these securities and just basically creating IOUs on their balance sheet. They create the cash, they buy these securities, which injects cash into the markets. And so if I zoom in to just the last 3 months, what you're going to notice is every week they actually started to sell some of these back. They're on a little bit this week and last week, buying just ever so small, but they're actually talking about, like I said, selling back masses of these starting in June and ramping it up to about 95, 100 billion per week that they're going to be selling back. Remember, their balance sheet has swollen to almost $9 trillion. So even selling back, and I think it's a week, it might be actually per month, but still $100 billion per month. It's going to take 10 months just to go down $1 trillion. And they really like, according to their meeting minutes, to get down below $4 trillion. So that's like hammering out $5 trillion. And they're talking about being very aggressive. So this is going to be probably more significant than even raising the interest rates a couple points over the next couple of meetings.